It does take us to our talk of the tape, and it is this resilient market. Let's welcome in Adam Parker. He joins us now, Trivariate Research, the founder and CEO, also a CNBC contributor. Welcome back.
Great to be here.
What is your current read on the market and what's been a really noisy week or so?
I mean, Jensen is in New York today telling all the institutional investors that there will be return on investment for NVIDIA and calming people down a little bit. Because when I do my meetings in this last week, I'd say 3 or 4 times it comes up, hey, I think one of the biggest investment controversies is what will the return on all the capital spending be for the hyperscalers? And so you get the CEO of NVIDIA in town saying, calm down, and I don't know if guys went out and bought more or whatever, but that stock acts well.
They actually did.
Yeah.
I mean, they're buying more. It's up 4%.
He's meeting all the big investors. He comes around regularly, he's doing his normal kind of Boston, New York trip, but I think he knows that one of the biggest 5 or 10 investment controversies across the whole stock market is, will companies see return on that? And then the answer he's telling you is, yeah. I mean, after lunch meeting I went and looked at the healthcare stuff on NVIDIA's website just to get excited about some of the, applications there. So for sure, I think that debate, people know that the quarter's going to be fine. It's not for quite a while, but that maybe they feel a little better about that debate than they did before he went around and came to town.
Do you feel a little better about this trade then? The overall Megacap tech trade? Now this is back above $3 trillion in market cap.
I still think that, well, two things. There's 2 currents there. One, I think semis, you want to be overweight for 1, 2, 3, and 5 years. Okay, I like the trade. I don't think I'm smart enough to know exactly what's 3 weeks. It pulls back 20, 30%. But NVIDIA was at 14. It went to 140. I wasn't smart enough to sell it down to 100. I'm not smart enough to. It's a long.
Okay, so you say
in the whole complex.
Then don't pay attention to the price action really in that space.
I don't think so. What I think happens with growth investing is only when you get in the top decile, the most expensive 10% on enterprise value to forecasted sales, then you get in that alarm area. But as you know, a lot of the semi companies' revenue is up a lot and their estimates are up a lot, and so the valuation isn't crazy for a lot of these names.
I had Rick Reeder on of BlackRock earlier today on Halftime, and he came across as, he described himself as basically an uncomfortable bull.
Yeah.
A lot of money around, so it's hard not to be bullish, but then he looks at the multiples and he's like, I'm a little uncomfortable. It sounds like you guys share a view that way, right?
Yeah, I don't mind being associated with in the same sense with him in any way. So sure. I think there's certain names. We're working on a research note at Trivariate where we're looking at stocks that have been re-rated. Like I could tell you, I think Costco is an amazing company. I think we've all been there. It's a good store. We like some of the operating characteristics, but there aren't that many companies that are 250 billion plus in revenue that traded in the low 30s times forward and now traded 50 times forward. Like at some point, it's hard you get a little nervous about, you're uncomfortable a little bit about the valuation, even if you think it's a great business. So I don't think the Mag 7, or if you want to say Big 6, whatever, are really at that level. They're not quite that expensive because they're growing pretty well. They're growing faster than the market, excluding the Mag, stocks, whatever, 7 through 500. So I think things are okay. I think people get a read that maybe earnings are going to be fine. And so they're a little bit, more relaxed about the next 3 to 6 months, I think.
Why do you think the market has been as pretty resilient as it has? We have an election a few weeks away. Have another very, very big and dangerous storm heading towards Florida right now.
Right.
Not to mention, just other issues that are out there. Yields are still hovering, high. I could go down a list of other things.
I was worried in July and August. I was worried even into September about the slowing U.S. consumer, and I didn't really think the Fed cutting would solve it alone. China, kind of did a bit of a weird head fake here a little bit. They got people excited there'd be multiple things coming, and then they sort of took a step back today. But you don't want to fight stimulus plus, the front end, right? I just did a bunch of meetings. I don't know anybody who thinks the Fed's going to cut 6, 7 times in the next year. I think people think if they do, it's because conditions got much worse. I see the big firms now saying, I'm now at my normal probability of recession back to 15%. Like everyone who never had a recession, and people took their recession probabilities down. And that's not how I remember things. I remember them taking them up a little bit as time went on. So I think maybe people are a little bit more comfortable that we've got some macro data that's not acute, that maybe spending will be pushed off a little till after the election, and then we'll get a little bit more confidence out of the CEOs for next year. And so I think people think the risk reward's a little bit better, and that's where people's heads are. I never thought the Mag 7 should underperform or lead the Big 6, unless you're very bullish on the market.